Navigating the uncharted waters. Factors to consider when investing in alternative investments like venture capital and private placements. Introduction. In the quest for diversification and enhanced returns, investors increasingly turn their gaze towards alternative investments, seeking opportunities beyond the traditional realms of stocks and bonds. Venture capital and private placements, as notable constituents of this alternative landscape, beckon with the promise of high-risk, high-reward scenarios. However, delving into these uncharted waters demands a nuanced understanding of the factors that can shape the success or failure of such investments. Risk and return dynamics. Alternative investments, by their very nature, carry a heightened level of risk. Venture capital and private placements, in particular, epitomize the ethos of risk-taking. Potential investors must recognize that the allure of substantial returns is accompanied by a commensurate level of risk exposure. The risk-return dynamics in alternative investments differ significantly from traditional assets, necessitating a thoughtful and informed approach. Consider a venture capital fund targeting early-stage startups. While the potential for astronomical returns exists, the likelihood of some investments yielding losses or even total failures is also substantial. Balancing risk appetite with return expectations is paramount, requiring investors to assess their tolerance for volatility and the potential impact on their overall portfolio. Due diligence on investment opportunities. The landscape of venture capital and private placements is replete with opportunities, each presenting a unique set of challenges and prospects. Engaging in thorough due diligence is a critical factor in navigating this terrain successfully. Investors should scrutinize the business models, competitive landscapes, and growth potential of the companies or projects in which they are considering investing. For instance, in the realm of venture capital, understanding a startup's market position, scalability, and the experience of its management team becomes crucial. Private placements, ranging from real estate developments to infrastructure projects, demand meticulous examination of financial projections, regulatory considerations, and potential risks that could impact the investment's success. Liquidity constraints. Unlike publicly traded stocks and bonds, alternative investments often come with liquidity constraints. Venture capital investments, for instance, typically involve a longer investment horizon. With returns materializing upon a successful exit event such as an initial public offering, IPO, or acquisition. Private placements may also feature illiquidity, especially in projects with extended development timelines. Investors must factor in these liquidity constraints when allocating capital to alternative investments, considering the potential impact on their overall portfolio liquidity needs. Balancing illiquid investments with more liquid assets ensures that investors maintain the flexibility to meet short-term financial requirements. While participating in the potentially lucrative opportunities presented by venture capital and private placements. Diversification strategies. Diversification remains a cornerstone of sound investment strategies, and the same principle holds true when venturing into alternative investments. The idiosyncratic nature of venture capital and private placements demands a diversified approach to mitigate risks associated with individual investments. Spreading capital across multiple ventures or projects helps cushion the impact of any single failure while allowing investors to capture the potential upside of successful ventures. For instance, a venture capital investor might diversify across different industry sectors or stages of company development to create a well-rounded portfolio. Similarly, A private placement investor in real estate may diversify by geography, property types, and development stages to minimize exposure to regional or sector-specific risks. Management expertise and track record. Investors in alternative assets must assess the expertise and track record of the fund managers or project sponsors. In the world of venture capital, successful investors often possess a keen understanding of emerging technologies or industries. Coupled with the ability to identify and nurture high-potential startups. In private placements, experienced sponsors with a history of successful project execution inspire confidence in the investment's viability. Investors should scrutinize the historical performance of fund managers or sponsors, examining their ability to generate returns, manage risks, and adapt to changing market conditions. A strong track record indicates a level of competence and strategic acumen that can significantly influence the success of alternative investments. Regulatory and legal considerations. The regulatory and legal landscape surrounding alternative investments is multifaceted and varies across jurisdictions. Investors must be well versed in the regulatory requirements governing venture capital investments, private placements, and the specific structures through which these investments are made. For instance, venture capital investments often involve compliance with securities regulations, while private placements may be subject to intricate real estate laws and zoning regulations. Investors must navigate these legal complexities, understanding the implications for their investments and ensuring adherence to applicable laws. Exit strategies and time horizons. Understanding the exit strategies available for alternative investments is crucial in assessing the potential return on investment. Venture capital investors, for example, often realize returns through exits such as IPOs or acquisitions. Private placement investors may have exit strategies tied to project completion, property sales, or other predefined milestones. Investors should align their time horizons and financial goals with the exit strategies associated with alternative investments. A clear understanding of when and how returns will materialize allows investors to plan effectively and manage liquidity needs. Conclusion. Venturing into the realm of alternative investments, particularly in the domains of venture capital and private placements, represents a journey into uncharted territories. While the allure of diversification and potential high returns is enticing, investors must tread carefully, considering factors such as risk appetite, due diligence, liquidity constraints, diversification strategies, management expertise, regulatory considerations, and exit strategies. Armed with a comprehensive understanding of these factors, investors can navigate the complexities of alternative investments with prudence and increase their likelihood of success in this dynamic and potentially lucrative landscape.